So they have separate different investors that we use. So for example, I have clients that tell me, I don't want to show too much of my stuff. I just kind of want to get this house, but I don't really want to show a lot of my income. This program, the 3-month statement program, basically, it's for those people who didn't do too well in the pandemic. They didn't have enough money, and all of a sudden their business are booming right now. 2022 is doing very well. This program, the 3-month bank statement program, basically, the maximum qualification, it's all based on the 3-month average. So we're gonna look at the March, February, and January. So we want to see all those in April, I believe. So what they do is they average. So let's say they had huge deposits for the last 3 months. And we're talking about big deposits, not just 20,000, because it's not going to qualify. We're going to use 50% of that income. So mainly are for big corporations, people who are coming in with like 150,000 in deposits per month, because we're going to use 50% of that. 50% of the deposits. So if they don't have big deposits, and obviously this is not going to be the program for them. But this program, I've closed deals within 2 weeks. I mean, it's phenomenal because all you have to show is bank account, your credit, it's 700 and above. And let me tell you, the credit really, really, really matters. Because if you don't have good credit, guess what? We'll take advantage on the rate too. The rate will be much higher. So it's based on someone who has good credit, who has a down payment, because normally these programs, you need to have minimum of 20% down. 20 to 25% down is not for the first time home buyer, for someone who just save up their money. It's not really designed for those type of borrowers. This program, it's designed for a self-employed who has money in the bank, but they don't show a whole lot in their tax returns. And trust me, I think from all the clients that I've always qualified that they're self-employed, they don't put a whole lot of money, including myself. I mean, you have to find ways to work with the IRS, but these programs will work directly with the borrower. And they do need to have some reserves. As you can see, they do, like if you want to cash out, they do require for you to have reserves. So it's a program that it asks a lot within money. They want to see substantial amount, that you're not going to lose the house within 6 months, within a year. So it's very important. And most of these loans, they have a 30-year fix. They have an interest only. They have a 40-year term. So they work with the borrower to bring that payment down. Most of the rates right now for a lot of these programs are between 6.5 to 8.5. So like I said, if you have a client who's like, oh, I want this house, it's $1 million, but I want like a 3% rate, it doesn't exist. Not even a conventional. Conventional loans rates have gone higher. So obviously if that has gone up, this program is going to be a lot higher. So this is one of my best programs. I do a lot of this 3 months. It's just want to walk in, they just want to beat the whole offers out there, and it just says, boom, we're going to give you this much. We can close it in 2 weeks. So think about it if you have a self-employed who has really good deposits. And that's, like I said, we can only go 3 months. And they also have 12 months. We can also do 12 months. We can also do 24 months. The more you provide, the better the rate. So if you go 12 months, the rate, it's going to get better. If you show 24 months, it will definitely get better. And just so you know, these programs don't have prepaid penalty, which is big. They don't have for owner occupancy. So if you get into a house and let's say in 6 months the rate drop and now your situation financially it's better and you can jump into a conventional loan, most definitely you don't have to pay a penny for any prepaid penalty. So they're great loans. They're still not considered like hard money lending that they do require to have a prepaid. The rates are crazy high. It's a great program to look into it if you're really interested to get into escrow right away. And a lot of these little terms, it does, you know, for example, once you start going up above $1 million, they do require, I believe $1.5 million requires 2 appraisals. Below that, you don't need 1, you just need 1. Properties that normally they lend as on single family, condos, townhome, and the property's got to be in good condition. For the most part, some people just think that, oh, it's hard money. It's not hard money. So it's not just a little shack that they're going to finance. It's a real home that they want to finance, an investor want to come in and help out. If the house needs work, then I also have like a bridge kind of a loan that gives them money to fix the property while they're gonna get an escrow and then they can go ahead. But that's kind of like a short-term kind of a loan. It's only for like 6 months to like a year. After that, they do require for you to refinance. But they give you the money for you to build, for you to do construction, for you to help yourself as far as trying to get the buyer into the property. But this program's sort of like a normal loan that they want to qualify for a single family, condo, etc. Minimum down payment is 25%. So they do require, like I said, a much higher down payment, not just, I believe if you are above 750, they will ask for 20%, not so much 25. So it just really depends on people's credit. Credit, it's huge for a lot of these programs, okay? So keep that in mind. Also, can you go to the next one? Thank you. And then this next program, I use it a lot for like the investors. People that want to come in and they just have a lot of properties. Let's be real, when somebody has more than 5 properties, I mean, their tax returns are going to look like a lot of losses on the rentals. They're just, I mean, this program is basically, you line up all of your real estate into that application. We don't ask for rentals. We don't ask for returns. We don't ask for income. Basically, it's the easiest non-occupied program. I do it a lot for investors. We just put that normally this one has to come in with 25 to 30% down, but it's kind of like a stated. We're not really stating any income. We just list that they have all these properties, all these assets. They're coming in and buying a new property. They're putting 20, 30% down, but the credit, once again, it's the key of it. We need to have at least 700 FICO for this program, but it's a perfect one for a lot of the investors. Same thing, that they just don't want to too much hassle with the paperwork. They just don't want to give a lot of that. And I totally understand because it gets overwhelming. I've done loans with the conventional and Fannie Mae. They ask for not only the tax return, but sometimes for the leases, sometimes for the profit and losses. Now they get the CPAs involved, and it goes on and on and on. And people don't like that. But if you want the best rate, that's the way to go. But if you don't, it's always the alternative to get people into escrow. It's really how to educate the clients. When I talk to the clients, I think the most important thing is, like you as a real estate agent, you always ask, what are your needs? What are you looking for? Well, I want a swimming pool. I want a bigger kitchen or whatever. This is the same thing that works with a loan officer. What are you looking for? Are you okay providing documentation? Do you want to see if you can go the route of trying to see if you can get the best rate possible? Some of them go, okay, so how much paperwork right away, right off the bat? So I always tell them, look, if you want to get the best rate, then you're going to get a line. I mean, it's going to be a huge list of documents that we'll need. But if you don't, I always come up to the non-Q programs. They're great programs. They're quick to close. These investors are hungry to close these deals. I'm sure other loan officers have come in and explained to you, these programs are really hot right now because a lot of people don't want to show the tax returns. And we're talking about self-employed. We're not talking about W-2s. I do a lot of W-2s when people don't have good credit with this program because obviously they have the down and they're not getting really qualified for a conventional loan. Then this is going to be a program to look at. So this one, it's very, very good. They go up to 2 million. The jumbo goes up to 5 million. So hopefully you come for a jumbo one. Right? But it goes up to 2 million. And then from that point, you can jump into the jumbo. The rate is much higher, obviously, than this regular. We can probably go up to like 8.5. So it's not very appealing. Exactly. See, we just saw, oh. So, I mean, this is a program designed for an investor just wants to come in. And sometimes they just want to come in, run it for a year, and they just want to sell it. They want to make a quick buck and just move on. This is great. Like I said, not a lot of paper. So it's something that you want it as a real estate agent have, hey, I have this program. I have a lender. Or, you know, there's so many lenders that come in here. And I think the most important thing is trying to educate people. The more you educate, the better people are going to call you and they're gonna want to say, hey, I know so and so. So this is great for that. Can you go to the next one, please?
Yes.
Okay, so the multifamily program, this is designed for 5 to 29 units. Their property types, multifamily residential. Multifamily, meaning it has to be residential. It's not like commercial. It's more like a bunch of like units or like those big old high-rise condos. So that's made for this type of loan. So a lot of people will call me, is that for commercial, like mixed use or anything? No, unfortunately it's not. It's just for a lot more units, but it's considered still a residential kind of loan. They do provide 30-year fix, interest only, you name it. They want to work with the borrower so they can bring in the lowest possible payment they can. And they do require 24 months of reserves. So this is for somebody who has money and wants to wants to purchase a big complex, but they have the money and they got the credit. This programs, they really don't work for less than 685, to be quite honest. They don't get approvals. I've tried, but it just asks for more reserves and sometimes they don't even have it. So it just becomes very difficult. I think in my opinion is for somebody who's a big investor and just wanted to get an escrow right away. They don't want to go through the whole Chase, US Bank, all those guidelines, okay? So just think of someone who doesn't like to provide paperwork, I guess. And they do ask for a net operating income. That's very important, obviously. They want to see how much the profit of the whole units or building, etc. Can you go to the next one, please? Now, for national. This goes along a little bit with the I-10 too. I mean, this is basically a very easy kind of a loan. All they need is a letter of good standing with current financial institution or international credit. So this is for people coming from overseas, right? And they have credit over there. I did one a year ago, and they were from Mexico, and they gave me a credit report from down there, and it was really good, and the lender was able to use it. And that's basically how pretty much what they do. And they want to make sure that they have some type of visa that they can come in here and come and go, obviously, because they want to make sure. Yeah.
Where's the money? The down payment.
The down payment can come in from Mexico. Yes, as long as they can show that they have bank accounts and they're all legit, they can use it. So no cash. Obviously, it still goes within line that money lenders and all that. It's not acceptable. So as long as you can prove that you have bank accounts, you have business over there, and you just want to buy a property here. Same thing with I had a client from China. Lots of money, crazy, ridiculous. So I was like, oh, you don't have to show me more accounts. I told them, they keep just giving me more. I'm like, no, it's okay. We just need one or two that shows enough to qualify, and obviously a credit report, and they don't need any income, job, nothing goes into the application. It's kind of crazy, to be quite honest, but that's just no reserves. It has to be a non-occupied paperwork. But remember, once you close the deal, I mean, they don't come and knock on the door. This is not like the FHA. FHA, they do regulate. In my past 27 years, I've had 3 inspections by FHA, and it was crazy. I couldn't believe it that they actually do it. They do go and they knock on the door. They ask, "Hey, so and so live here?" And they're like, "Yeah."
Are you still married to that person?
Yeah. No, pretty much. I just want to know that the person lives there.
Why is it non-occupied requirement?
Yeah.
Isn't it occupied better than
Yeah.
occupied?
Basically, if you don't live here, you can't buy a home for honor occupancy, which is kind of stupid, Peter. I agree with you. But I always tell them they're not living here. That's it. And you close it and
they a lot of times they purchase the property for the daughter, son and daughter who
they come
attend school here.
exactly, and that's what they do. They said it's not a non-occupied because I'm not living there, but I'm gonna have we're gonna have somebody to rent it. They don't care who it is. You don't disclose. Oh, it's my property.
But would it be better to have owner occupied?
I agree with you,
Yeah.
but I don't know, just because you're foreign, they just make it, I know, it doesn't make sense. I just think that the reason why is for, government purpose, I guess, because if you don't have a residency here in the United States, you can't buy. This is like a weird program that they created for all those people that they know they want to get their monies in. And obviously, the lender is the owner of that property, whether if they lose it, you know, that they're gonna keep that, so they don't really care. I think it's more for guidelines with the government, that they have to put it like that. And they have to be very obvious, like saying it's a non-occupant.
Can
What would-
we still loan them out a little bit more because $2 million you cannot buy them.
I would have to ask, but I do work with other two lenders. They do a lot of this program, but every lender has their own, you know, their own map, so I can ask.
Maybe they can put a little bit more money, but then.
Yes, and I'll ask. I think, there's another company I work with, they go up to 5 million, but yeah. This one in particular, I work with them a lot because I love their customer service and they're really quick. That's who I'm using, their guidelines. But remember, I'm a broker, so I have the ability to shop the loan, to look for other lenders, to see if we can put your client into a certain program, okay? So it doesn't stop there. Obviously, I'll exhaust all my sources, and if I can't do it, then I'll let you know and you can shop it somewhere else. That's why this is the beauty of having all these different lenders come in and talk to you guys, because what I have is not what somebody may have. So we all have different programs and we all work very differently.
So all you need is the credit report on this.
That's all that they ask for, a letter of good standing with the current financial institution. So
From the bank.
from their bank,
And the credit
and
report.
then a credit report,
That's it.
international credit report.
What would they do if they did find out it was owner occupied?
They can, if they do find, they can actually call up the loan and you have to refinance or pay them off. I don't think this happens a whole lot for these people. They don't care. They just do it. Like I said, it's more for regulations. If they get audit, they can say, hey, you know, we did it the right way or whatever. I don't know how much
I'm not
they
gonna
go
do my
send. I
assessment.
know with the government,
I'm not
with
gonna do my
FHA,
Yeah.
They
I would
do it.
Stay here for a day.
and the next one. Okay, so the ITIN number, has become very popular. The ITIN, you can do it for 3 months, 12 months bank statement, 24 months bank statement. You can do it any way like that. They do require 2-year credit history. Very important. I'm gonna have some water because I think I'm talking too much. So, and
Do you want water or do you want soda?
no, I'm gonna, okay, you can have some water, yeah, if you don't mind. Thank you so much. So, they need to have a valid ID with their name. You know, I know some of them are W-2s, and they do apply for jobs with the W-2, but they use the IT number to file taxes. Thank you so much, I appreciate that. Unfortunately, I think there is one lender who's allowing, but there's a lot of restrictions because you can't use 2 social securities to apply for a loan. And I have run into a lot of those problems lately. So it's one of those things that if it's an IT number, I think it's more designed for self-employed because they file their taxes and they do everything through their tax returns. So they do require 80% of 20% down payment. And this particular company, they go up to 1 million. Loan amount, not purchase, the loan amount. There's another one that I work with, they go up to 2 million. But a lot of them don't go that high. The most I've seen is $1 million loan. But you know, the way houses are going for, I mean, they have to keep increasing the loan amounts too with a lot of those programs. So a lot of these programs are all alternative programs for the people that don't want to qualify for the Fannie Mae, FHA program, jumbo loans. This is designed for somebody.
What is the rate on the other program, the international?
It's high, 8.5 starts. Yeah. Yes.
Start.
They could afford it.
Yeah, so I know, unfortunately, it's one of those things that, they give you the ability to apply for these loans and they want you to, but the rates are not very, they keep saying that they're gonna try to be very competitive. And I work with the other two lenders too, and I kind of compare and I try to see what's best for the client, obviously, if this lender or the other one. It just all depends on what the credit looks like, what kind of resource we have, and all that. And then I'll shop it to see which one will give us the best rate possible. Because at the end of the day, I get it. We want to give the client the best possible rate and the best possible payment so they can afford the house. So all the owner occupieds don't have prepaid penalty, but the non-occupant, those do have prepaid penalty. So remember, the non-occupied, so like the foreign has like a 3-year prepaid.
How's it compared to SBA? SBA loan?
How does it compare?
Yeah, the rate wise.
Oh,
It's even higher than the SBA. right?
yeah, yes.
So, the SBA is easy to qualify also.
Yeah, it's
And
easy to
a
qualify.
long term, it's like 25 to 30 years. Sometimes.
Yeah, yeah, there's a lot of these programs, they're trying to compete and become a little, supposedly they're trying to be a little more creative. But I see what you're saying. Some of them don't have like the best rate, not very appealing. So like I've seen other lenders that I work with, they do the same kind of a program. A lot of this program, they have maybe like half or 1 point less. So it just really depends. It just really depends. Like I said, I'm a broker, so I work with 3 different lenders that do this type of program. So I always see who's giving us the best. Before this whole thing with the rates, I was doing the 12-month bank statements. I think the rates were at that time, like before it actually started going up, we were in the 3s, and they were doing like a 3.875, which was really good. But all of a sudden, their rates went up, and I think it's a lot with, obviously with the inflation. Everybody's trying to see how the rates are going to play, how they're going to stay, how they're going to maintain. And if they see that they're going to maintain well, they'll start dropping because then they know that they're going to get the returns back. And unemployment, that's huge. I mean, I always look at the unemployment because that's really what I depend on. I want to make sure people work. If people work, they're going to buy homes. If people don't work, I don't care if it's 1% rate, they can't afford it, bottom line. So we're out of business. It's the most important thing to make sure that the economy keeps going. There's right now, I read on last week that there's 2 jobs for every person right now. It's crazy. No one wants to work. And there's a lot of people that died with COVID. And there's a lot of people that retired because of COVID. People are afraid. Some people don't want to go. And I don't know, I've heard a whole lot of depression and all sorts of things. But at the end of the day, I mean, we have jobs, thank God. And if we can work, we can still buy. It doesn't really matter how high. I mean, I remember when 2001 with when I saw New York on fire and everything, I was like, oh, I'm out of work. I told myself, everybody's going to work. I was going to go to work. Everybody's going to go to work, right? And after that, the rates, I mean, the economy got crazy. And I started doing all this and they got so creative. The state of programs came. Obviously, we all got in trouble and mortgage meltdown came down. So I know it's a cycle. And I know it's going to go ups and downs, but there's no way on earth. And because I talk to my financial advisor all the time, I tell him real estate is the best way to go. I'm sorry. I've had properties, it's still there. As long as they're renting, I'm still making money. With the market, it's ups and downs. I've lost a lot of money, I've gained a lot of money, and it really depends where you're at. And if you can take it out at one point and you're happy with that amount, then obviously. So bottom line, don't get discouraged about the rates. I think if you do that, if you're already like this, then your client's not going to want it. It's one of those things. Yeah, but that's what I'm trying to explain. There are great loans. There's the conventional they're still very creative. I mean, I do a lot of conventional loans with people that call me and say, they denied my loan because I have multiple jobs. I said, really? That's crazy. I've never heard of that. You have to structure the loan correctly so they can sell it correctly. That's all. So you can still, I always exhaust everything I can to do a conventional conventional or FHA loan for the client, because obviously I want to give them the best rate. But if not, just think about it as an extra income that you can make, just like lands. I hear some realtors don't like to sell lands, they stay there forever, but some people are willing to take it. That's just kind of how it is. So, you know, I think a lot of these programs will, they continue to do very well for certain kind of client, not for everybody, obviously. So just think of me if you have any programs like that, or, you know, I'll do them all. I do FHA, I do conventionals, I do VAs, non-Q jumbo loans. But I think I've been getting a lot of people, they call in so often for obviously IT numbers, or I think that's very popular. And obviously all those people out there who are self-employed that they can't get a house for, oh, they do get approved, but it's only for 600,000. And they're like, oh, I can't find anything for 600,000. Everything I like, it's 900. And then I said, okay, well, if you go bank statements, you probably can prove a lot more income. And then you probably qualify for this, but this is what the payment will be. Some of those people, I can honestly say 70% of those people who say, you know what, I can refinance later on. You can, as long as you can start reporting some money and you can prove that you can make the payment. And I've seen people do that because obviously, oh, they put their kid or somebody else, and they eventually the refinance into a much better loan with the convention. So it's a great, well, I look at it like they're great programs. I like to sell them all. I'm just very optimistic and very positive, and it's just my nature. I've always liked to tell people, I just want you to own your house. That's all. I know that I'm a very happy person. I love my house. So I want that for you, and I want that for you, and I want for everybody, especially when I see single moms or just a young couple trying to get their house, and there's, oh God, they get so excited but they don't have enough. So I know that, I'm sure that's the way of you guys, like, I gotta get this person in escrow. How can I find them a house? So it's a challenge, I know, and we just kind of have to work hand in hand, just trying to get people into escrow. Like I said, I'm a little more, like, I like to educate people, and I always give them options and, you know, take it from there. I always tell them, because that's how I want to be treated. I don't want people just to sell me one thing and this is it. It's just how it is. But I also want to look for the best interest of the client. And if the client just tells me, I have client that tells me, I just want to know your fees. I don't even waste my time. This is my fee, very transparent. I tell them how it is. And if they like it, if they don't, they don't, because that's what they're looking. They're shopping for fees. They want to get the least possible fees, no points or whatever. So I think we all have different clients that their needs are different. So I'm okay with that. And yeah, so I've been doing this for 25 years or more, believe it or not. I love it. I'm passionate. I love what I do. I just feel like it was my call. I love talking to people and explain and educate. So if you ever need anything, please give me a call. I hope that you guys enjoy the sandwiches from Portals. I also speak Spanish. I wish I speak Mandarin or anything else, but I don't. So, but I do speak Spanish. So if you have a client that needs Spanish speaker, huh?
No Chinese?
No Chinese yet. I'm trying to learn.
About gift letters, because I got a gift letter when somebody's trying to purchase a house. I mean, really, it's something I can type in. There's no
I do it.
signatures, there's no nothing.
I have it, and I do it for the clients.
But how do you know that that's really going to come to fruition if you're considering that on an offer?
Well, it's a legal document for us in the lender industry.
Oh, okay, bingo, because
It's interesting, and I tell a lot of people, if you're putting a name into that paper, in the account, then it better come from that account. Because it's a legal documentation for us, and we're taking it as a good faith that so-and-so is gonna give us that money. So it is a legal documentation. So I don't see why any realtor would not accept that from somebody.
Okay. that was my
Sometimes they
question.
do, and I see it, and I think it's valid. Some realtors want to see that the donor does have the money. So it's a valid thing, and I tell a lot of my realtors, you're gonna have to provide the bank statement. You can white out their bank account just in case if you don't feel comfortable. But the gift letter along with it, because that's the legal document that goes into when they sell it to Fannie Mae or at the check.
But there's no signatures on that thing.
Yeah, you need to put a signature.
Okay. The one
Everything
I
has
got
to
had
be,
no signature.
yeah, no.
Okay,
It has to be filled out completely.
that's what I thought,
Yeah.
because I was like, what the?
Yeah, no, it's a legal document, so everything, just like the offer, you can't just put an offer without signature.
Okay.
Carol,
Yes.
do you deal with those intermediate companies that they represent foreigners, buyers, and they deal with the money exchange? You know, they are like intermediate companies. I know in our association, a couple times those companies from Florida, they're based in Florida. I can find the name of it. So do you deal with those type of companies
I haven't
as a
had,
lender?
I haven't had any of those. I have.
Well, you know what I'm talking about.
Yes, I do know, but I haven't come across anyone. I have heard. You just have to kind of be careful because I know that some of them have gone out of business because they didn't have everything within line. But normally the two loans that I've done with the Corns, I've dealt directly with their institution out there and everything has been very like informed, so. But yeah, I've heard of those. You just have to.
They just charge a minimum fee.
Yeah, they do.
And they lock in the money exchange.
Yes, I've heard of that. I just haven't personally, so I don't have a lot of experience that I can honestly say. But I've heard of other lenders or loan officers that have worked with, as long as everything is with the line and they can always show that that should be okay. It's like a broker, like a third party person and
Yes.
thing. Yeah, so that shouldn't be a problem. So it just really depends.
Carol.
Yeah.
Carol, with the non-QM loan, would you get into the predatory lending type of danger? If later on the borrower cannot service the loan, and then you didn't really go at length to see how they can afford to pay back.
Yeah,
kind of
so.
thing, because since the 2008, they're very, very sensitive about predatory lending.
I agree with you 100%. That's why it's not, for like the people who are owner occupant, that's why, because for those, that's the same reason they put non-occupant. There's different laws. So if you're buying as an owner occupant, very important that they do prove that bank statements, that they prove anything like that, that they can always come back and say, hey, on 2021, you showed us all this money, what happened? You see what I'm saying? When it's a non-owner, like the foreign, they have different things. They can go after, they can just close it and foreclose right away. They don't have, oh, trust me, they know they don't want to lose money like they did, and they don't want to be out of business like they did in 2008. That's why the prepaid penalty is not for owner occupant. It's only for a non-owner. They're smart. They know what to do, the lenders, because they also want to get their monies back, their interest, but at the same time, they don't want to be in trouble. They don't, because obviously that's a big deal. I mean, how many people lost their homes in 2008? Tons. Prepaid penalties, which were ridiculous. So many people could pay $20,000, $18,000 just to get out of a loan. Can you imagine? I remember I probably refinanced like 10 people at one point, and all of them had prepays. That was like $100,000 right there. Can you believe that? I just felt like, man, not only they were making interest, they probably got through another loan with points and all that, but it was just the way it was. And, like I tell a lot of people, we go with emotions. I mean, if I truly don't believe of something, I won't sell it because I'm a homeowner and I would never want somebody to lose their house because I didn't do the job or I didn't explain it or I didn't believe it was right for the client. Because I have clients that come and tell me, do I get into an adjustable or should I get in a fixed loan? I personally think if you're a first-time home buyer, if you've never had any experience in a home, I think you should be in a fixed loan. You get educated, you understand the system, and eventually if you ever want to buy another property and you want to understand a little bit about the adjustable, you could, but then you have some type of experience. But I don't think it's a smart idea for a loan officer to sell an adjustable loan or a balloon or an interest only to a first-time home buyer, because they're gonna be like, wait a minute, like I don't know, and they don't, and probably they do, they know, but they just don't know the concept behind what an interest only is. Well, I thought I was gonna pay interest, yeah, but you're not paying anything in your principal. Oh, is that how it works? Yes. So I think they gotta go little steps till they become a big, obviously an investor, they have, the investors that I work with, they only come for certain programs that I have, and that's what they want because they know how to use it, and they're gonna sell out and they're gonna move on. But for somebody that has never had any experience in a mortgage or having a home or anything, I think it's very important as a loan officer to spend the time and explain that to them so they know what they're getting into. Any other questions? Anybody?
What's the process? You know how loan docs are normally just sent into escrow, and I've always kind of had this question mark in my head. 'Cause did you pre-explain those loan docs to the clients before they hit escrow?
I do. Okay, so there's a CD. You guys are familiar with the CD, the closing disclosure, right? Right before going to escrow, that document is how loan documents are gonna be asked. That's just how it is. So I always tell my client, let's go over the CD, make sure that everything is good to go. Do you understand what you're gonna be signing? Because I won't be there.
Okay.
And I go over, this is what the payment we talked about, the rate, yes, Carol, the loan amount, this is the down payment, this is what the closing cost, yes, boom, you're ready to go. So they don't have any hesitations of signing.
Okay.
But somebody who just says, hey, just keep signing and signing, sometimes they just don't know and they just keep signing. But for first-time buyers, people like that, they need to be, walk through the process. So I do it, even people that I don't, I just tell them, hey, this is what the payment that we discussed. Yes, yes. Okay, this was how much. Do you have any questions? Did you see it? No, I'm good. Okay. So it just depends on each, individual. I think everybody's a little different.
Carol, what would be the scenario where you would highly recommend someone that wants to refinance? When we have those interest rates that were below 3%, what would be your rule of thumb for like a customer that come to you and say, hey, I want to refinance? What would be the rate that you would say? If you're below 2%, then that's good to refinance.
Yeah.
Give us a scenario.
Well, I think, and that's a great question, especially right now because the rates are higher. And a lot of people refinance at 2.5%, 3%. Why would you want to refinance at 5%?
But I'm talking about when the interest rate were
We're low. Yeah.
I mean, there were people like, in my case, my interest rate is 4.25. I decided not to.
Yeah, well, I had exactly, well, this is the deal. It just gotta make sense for you as an individual. So for example, if you're trying, to me, $200 is a big savings, 200 and above. Anything below that, you gotta be crazy to pay fees and everything just for less than $200. Just my opinion, right? Any loan officer will probably say that's great savings, less than that, but whatever, to each of these own. I'm different. $200. Now, the situations are different. Some people may want to pull out cash to lower that rate. That makes more sense because obviously whatever difference it goes into that, right? Or I'm going through a divorce. I really need to pull out cash and I hate the fact that it's so there's different situations. But if you're just calling straight just to refinance and get some type of advice to your client, in my opinion, if you're saving more than $200, it's a win-win situation because over the period of the loan, and it depends how many years they've paid already.
Right,
If you already paid 10 years, then you know what I'm saying, that you
Yes.
still, you want to cut it, and I've done it where I cut their interest rate a little bit, but I cut the years and it kept the payment the same. So it's a win-win situation. You see what I'm saying? So it really, really depends on each borrower and their situation. Yeah,
You
I
answered my
mean,
question.
I personally didn't refinance in a whole, I had a 6%, 6.5% when I bought the house and my house. So the rates went down to 5, to 4, to 3. And when they dropped that to something, I was like, I'm jumping in. I save up like almost $700. And I think I cut 5 years already, just because I wanted to keep a certain payment for myself. And so, yeah, you see what I'm saying? It really needs to, and you got to talk to somebody who wants the best interest for your client and not just to make a buck, because we all want to make a living or whatever, but you have to be fair. You want to go to bed and have a clear conscience. And I do. I don't want to go and say, oh my God, I screwed so and so, right? So no, that's not what we're here. I mean, I've been doing this for a long time for the same reason, because I want to retain my relationship with my clients and the people I work with. So I think that's a big deal. And I'm sure all the lenders that come here, they've been coming here for a long time, so they want the best interest and the best thing for your client. So yes,
this is a different question.
Yeah.
Is it still a law that lenders need to give the borrower a loan estimate in the beginning? Because I have some clients and I ask them like, oh, did you get your loan estimate yet? And they're like, no. I go, "Oh, ask your lender. Ask your lender. And they're like, they say they don't know.
I don't think it's a rule. I think it's a moral. I don't think there's a rule or a guideline that says that you have to give, when you open escrow, the lender, within 3 days, they have to give your client an estimate. But at the beginning, as a loan officer, some loan officers don't want to do that because they want to hide their fees.
Well, that's why I thought the law was, once you fill out the application, within 3 days of that application, they must provide them a loan. It's not.
You don't need to have, if you're in business and you feel very confident of the type of work you do, there's no reason for you to give them, I give them an estimate whether they're gonna be with me or not.
Yeah.
Because I always, and at the end of my conversation with the clients, I always let them know, if somebody's giving you a better deal or something and you like the way I work and you want me to compete with them, let me know, give me a chance. And then I look at it, but if it's something crazy good that I can't even come close with it, then I'll be like, okay, now stay where you're at, because you're gonna get better. However, I mean, we only charge $900 to do a loan. We don't do it, we don't have any points. That's all we charge to do the loan, $900, besides escrow, title, and appraiser. So the client wants to buy. Exactly. When I always highlight my fee and they see it, and that's the same fee they see at the end of it. Unless the client wants to buy down the rate because of where it is, then that's by all means. But that's all we charge.
That's
And
very
don't you
good.
charge if they have their credit score is low?
There's a rapid score and stuff like that. I personally don't charge it. A lot of people tell me, Kira, you should. I think because they're being loyal and they work with me, really $150 more, I don't think it's, I mean, for me, I don't think it's a big deal, but like I said, every loan officer works differently, and I'm not trying to step on anybody's toes. Everybody conducts their business the way they do. It's like when you go and you do a presentation and you put your fees and your listing, that's Hopewell Banker. That is Century 21. And you gotta be proud of who you are and what you do for a living too. And if that's your fees, that's your fees. So, but that's what we charge, and like I said, I've worked with direct lenders, with banks, with brokers. Everybody has different fees. I've always left for a better turnout for my clients, obviously for a better rate or for a better opportunity, just because I've always want to make sure that I'm able to delegate for my client and help my client. So if I can, there's certain law firms or certain mortgage companies that they don't allow you, this is the max, and if not, they're gonna start dipping into people's commission. They don't want to do that. And I totally understand. I mean, you work very hard. Like if you have a commission and you want to go back to negotiate, hey, that's up to your institution and what you guys do. But in all reality, when I worked for Bank of America, the rates came up every day. This is what we offer, and and we were on a different, commission bracket. So everybody's different. So, but as far as where I now with my company, we only charge $900 for processing the loan, and like he was mentioning, I do rapid scores to help people improve their FICOs. We try to do whatever it takes to get them into FICO. Rapid score is through our credit companies. We get to do that. So if we see somebody who has a low score, we try to help them out so we can get them a better rate, and then by either adding them to someone else's credit, using them as an authorized user for somebody else who already has credit, or trying to see if we can have some collections to increase the FICO. It's just different things once we see the credit report.
Sometimes the borrower, they own investment property, and when you guys do the credit score, there's a lot of factors that go into the equation.
Exactly.
How much the interest they're gonna get, how much point they're gonna.
Yes, exactly. So we can see that, like if your FICO's here and we can put it here, this is what the rate will be. And sometimes it's a big deal. And that's why credit is very important. Whether you want to do this one, whether you want to do conventional FHA, the better the rate, the better credit, the better your rate's gonna be, bottom line.
Remember, I was referring to a friend of mine that was interested in buying this property, $899,000. This other vendor wanted him to put like 23% down, which was about 200 and something thousand, 235,000. So I asked him, what happened? He goes, well, my FICO score and my debt ratio. He only knows 14,000, but he has plenty of money to pay that off. He goes, well, I was late a couple of times. I just forgot. Like Home Depot really dings you really bad for being late on payments. And I said, just set up but he needs to clean up his credit, so he doesn't have to.
Well, yeah, I mean, late, that's hard, I mean, like,
Yeah.
unfortunately, I've seen it where somebody has 1 times 30 and has dropped like 40 points.
Yeah.
Like, it's horrible. It's like, oh my God, that one payment screwed me really bad. I mean, and there's nothing I can do if you don't make the payment. That's on you.
Yeah.
And because that's something that you, right now, you have to make your payments on time. So it's very important.
Earlier in the 3-month program,
Mhm.
so I'm assuming that the minimum is 3 months that they need.
Three bank statements, the last 3. So if we're in
Okay.
May, we're gonna need April, March, February, March, and April.
And then it said, no NSF, is that for?
Yes, if they see on those bank statements that you're constantly bouncing checks, they won't accept you.
Okay.
Because then obviously something's going on here. They're not keeping up with the money.
So that's
They're
the
just
con-
using after another one.
So they have to be constantly doing that, but if they have like one.
If this was in the past before the 3 months, then we're good.
Oh, okay, so they can't even
Yeah.
have one in
And
it.
then those 3 months that we're showing, we don't want to see that.
Okay.
Exactly. If you were bad in the past, you this is
Bad.
the good thing in America, right here in the United States of America. They forgive you. They forgive you after a couple months later.
Hey, Carol, I want to confirm, like you mentioned about the gift letter,
Yes.
and as far as the dollar, do you need the bank statement now, or I know that before, you know.
No, I don't need it. As long as my borrower tell me I'm getting a gift. I feel like we're adults and I can trust you that you're gonna get a gift, right?
Right, I'm talking about the.
But the real estate part for you guys, I think sometimes they ask for bank statements, so I don't know. Because they wanna know. I think that they're so tricky. Real estate agents out there that say, oh, we have a gift and they don't show anything. They open escrow and they find out like, oh, they can't get the money. And they're really upset because they're like, darn it, I should have asked for that bank statement to begin with. And they didn't. So, but for us, I always tell my clients, I need you to be very honest and tell me because I'm here to help you. I'm here to guide you and get you to the finish line with no problems. But if you start with lies, then we're gonna go, like, it's gonna be crazy.
Yeah, I'm not talking about the borrower, I'm talking about the gifter, right? The gifter, I'm sorry. The
You gotta
dollar,
have
the
proof.
dollar,
You gotta have
the
proof.
pool.
If they ask.
Yeah, if the lender asks for, but not every lender will ask.
No, the lender, for example, that's a great question. Every transaction I do conventional loan, I don't ask anything. All I tell my client is wire directly to escrow. As long as I have the legal form of a gift letter, it goes to wire to escrow, we're good. FHA does. Indeed, they want to see that the donor has the money in the account.
But not conventional.
No, convention doesn't
Yeah,
care.
'cause-
Which, let's cross fingers, I mean, fingers
Yeah.
crossed, seriously, I don't want that to go away because it's so easy. It's so easy. Like, they just wire, we close the escrow and that's it, they never ask for anything else. But
Yeah,
one person will mess up that and it'll
Yeah.
kill us all. That's just how it
Yeah,
is.
that's why I did that.
Yeah, for sure.
But that money has to come from the gift.
Yeah, of course. They will match the account and the name and everything. And if it's not, then they will reject that.
I know something where like, it was the parents that were going to gift the money. And the parents decided, no, I don't want to keep the money because I don't like this house you're gonna get.
Oh,
So
well,
then what happens is they might have the gift letter, but if it's not coming from that.
then it's not,
person,
if
it
you open
doesn't- it's not
escrow and
valid.
that's what you show, then
So
you're
they
gonna
can't
have to go back
find
to
it
the
somewhere.
underwriter and say, oh, sorry, they're not gonna do that. You're gonna have to provide another gift letter.
Yeah.
Or bank accounts where the money's coming from or something. I mean, that happens when families start arguing. It's like, oh my God.
I like
all
your
this is going
husband.
between.
What's giving you anything?
Thank you, Carol.
Thank you. Thank you so much, everyone. I appreciate you guys so
You had a
good.
lot of people on.
Yeah.
Oh,
Yeah.
there.
Ah, that's awesome. Okay, great, yeah. So call me if you guys need loans. Okay, we'll talk. Okay.
Are you able